Mike Shore, Prosper Trading Academy, joins us now for his day trade. Let's start with a trade that didn't work out so well for you. It's McDonald's, and this is the reality of day trading.
Absolutely. It showed initial weakness followed with volume, and so when that happens, that's a clue, given all the tools that we use, that's a clue of you want to get onto that train. It's a typical head fake, and that's what happens as a day trader sometimes. Everything sets up perfectly, and the world doesn't see it the same way that you do. And it's just a fact of life, and if you can't deal with that, then you probably should not be trading.
Let's take a look at your new trade. Where would you go this time around?
Yeah, so what I'm looking at is Viacom, V-I-A-B. And a lot of the setups that I use is usually me trying to find a level that I want to buy and it coming back to me, and that's in the case of a buy. In the case of a sell, that it gets up to a resistance point, and that's where I play off of. This one's a little bit different. Viacom, if you look at the chart, and I won't get too technical with it, but you can see how it's consolidating. If it does reach a technical point for me, 2960 is the actual level, then I don't want to, nothing's 100%. It's a very strong signal that is finally the breakout. And so you're looking at, you might see a little bit of a resistance right above that entry point, but then you can go all the way up to 3060.
So what would be a strategy then?
So then we would, if we ticked 2960, then I'm just going to jump on and I'm going to go out to next week and just buy the 30 call.
The 30 call.
Yep.
Now, you mentioned that sometimes there are winners and sometimes there are losers, but what do you do to gauge yourself, to tell yourself how you're doing?
Yeah, constantly I'm always looking at my metrics. I take, every single thing I document, and it's important to do that because you need to be accountable for yourself when things are going right and when things are going wrong. And the big thing is that you don't focus so much on how often you're right and how often you're wrong. Yes, it's important. You're not going to make money being right 10% of the time. But if you can keep that in kind of like I'm right 60% of the time and 40% of the time I'm wrong, as long as your winners far outweigh your losers, and that's when risk management comes in, and that's when, frankly, a lot of people that are unsuccessful traders, they are unwilling to realize a loss. And what you have to do is say, hey, listen, just like McDonald's, I'm not crying about it today, but I'm not happy about it, but that's what happens. Would I have done anything different? No.
Good to have you here. Thanks for that lesson.
Yeah, thanks a lot.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.